Jamie, welcome back to WealthChat for your annual review.
All right. Thanks, Lubna. Pleasure to be here.
Yes, I'm excited to have you here because it's been a whirlwind of a year. It's flown by. A lot has happened, and I look forward to discussing it with you. But before we get into that, please introduce yourself for those who don't know who you are.
Oh, sure. Yeah, for those who don't know me, my name is Jamie Holland. I'm the Senior Vice President and Business Unit Leader for our Industry Solutions business in Canada. That group includes wealth management organization, insurance organization, and a capital markets organization.
Sounds great. Well, you mentioned wealth, and wealth had a tremendous year. There were a lot of moving pieces, a lot of different things that were going on. The journey for digital transformation continued. And we were discussing some of the trends that occurred in wealth, and there were several. We can sort of start with sustainability, if you like, because that's been on the forefront of many people's minds, especially because of some of these announcements are coming out.
And one of the things we saw, and we did our Voice of the Advisor survey again this year, coming out of that was it was a top theme, top 6 kind of item. But there was a sense that people were chasing alpha as opposed to sustainability, right? So there was a real interest in returns as opposed to sustainability from portfolios. I think that might be true in the short term, but I think in the long term, sustainability is something that each advisor has to embrace. Great example. I've been watching this show on HBO, which is done by Robert Downey Jr. about his dream cars. So it's kind of a gearhead show, and the focus of that show has been on how to convert some of these classic cars to EVs to protect the environment, and so really sustainability has been about 50% of the topic. And it's kind of a theme throughout. And I think that's going to resonate with the younger generation, and the younger generation is going to end up inheriting the wealth and that wealth transfer is starting to happen. And so I think, it's important that advisors start thinking about sustainability as part of their offering to their clients. And, of course, all the firms are focused on ESG as a big part of their so every corporate is got a big focus on ESG because they know that sustainability is an important part of their ability to operate in the long term as well. So I think it's not quite as hot a topic as I would have thought it would be, but I think it's pretty important for advisors to embrace. So
definitely, and I feel within that topic, as you mentioned, example with Robert Downey Jr. transferring his cars, there's a transformation that's occurring where it's sort of you have to have some conversion into what the future is going to become. It can't always stay as it was in the past. And I feel that's a big part of it. And also, we have to move forward. And sustainability is a big part of how we plan to do that by ensuring that things are viable and that there is a future that's, not completely destroyed because, of course, there are a lot of environmental concerns and sustainability can definitely help with those.
Yeah. And people want to make sure that where they're investing their money is in places that they feel align with their principles and their values, right? So that's an important part of how an advisor delivers value to their clients. So.
Definitely. And there's been numerous stats that have come out about particularly the younger generation valuing sustainability, but also they want to invest with their values. So yes, they do still want a good return, but it's not purely return driven anymore. And we can sort of get a bit more into that when we speak about financial wellness.
Sure.
I did want to dive into VOA because you mentioned it.
Sure. Yes.
So Voice of the Advisor, this was our 3rd year conducting the survey. And we started conducting the survey because we wanted to hear from the front lines. At CGI, we provide technology to advisors, and we wanted to hear their thoughts on how they're feeling, where they expect their business to grow. And just some of the challenges that they're facing and really get an idea of their daily lives and how we can potentially help, or how we can help the firms make good decisions for their advisors. So what were your thoughts on the survey? And
yeah, no, again, I think it's an excellent piece of work that the team does. And I think for our clients, it delivers a lot of value because it's something that we share, and spend a lot of time going through the detail of it with each of our clients. So super valuable from that perspective. And I think it's always important to do some first party research as well, right? So that research, I think, has been really valuable input into the way in which we think about how our business is going to grow and where we need to invest our dollars as well. So I'm really pleased with the survey. And this year, I think we had 60% U.S. And 40% Canadian advisors input, which I think is a nice shift for us, because I think in the past years it's been more Canadian focused. So we're getting a much broader view of what advisors are seeing as the important things in their future and what they need to focus their energies on. I think the themes were kind of aligned with what I would have expected to see as well. So not a shocker. It's customer experience. There was a focus on differentiation, especially through financial wellness. Focus on data. And I think that's a big one with AI, with what we see happening in the market. And so, data is going to become a really important aspect of how advisors operate their business. With the concerns in the market around recession and the sort of you see it with all of the financial services firms, or headcount reductions and cost containment. A focus on smart operations was another big theme that came out of that. So. That was a really important one. So I mean, those were four of the key themes. There was a few other areas there, sustainability being one of them, that were top of mind for the advisors. So a really valuable piece of work, I think, and certainly I encourage everyone to get their hands on the research which we provide out to our clients.
Definitely. And so a bit more about VOA. This year, we did partner up with IWI, the Institute for Wealth. And so it was great because we got to go down to their conference in San Diego and interact with advisors in the U.S. The popular belief in Canada, of course, is that we usually follow the U.S. We're always a couple of years behind. So it was great to get their insights and see what their expectations are, and the fact that they were aligned with ours was good confirmation that we are thinking in the right trajectory. But, you spoke about customer experience, and that was definitely something that was very big, and it's something that was very prominent because the way the businesses in the U.S. are set up, there's large RIAs, and so there's more independent networks, and customer service seems to be sort of at the pinnacle for how they differentiate themselves. And after the results were in, we also did a webinar with IWI in order to speak about some of these results. And we had some advisors on, as well as research professionals on a panel to discuss this. And for those that are interested, we'll drop a link within the description. But it was a very eye-opening conversation for those that were in attendance, because they got to see sort of what their counterparts in the U.S. were thinking and how well they're aligned to each other's business models. But again, customer experience was the big one. So when you hear that customer experience is how they want to differentiate themselves, like, it seems like for a while it was all about being very quick, being very fast, and just getting funds invested and streamlining. But there seems to be a craving for this human element of actually taking a bit more time to getting to know the client.
Yeah, and that was, in the themes that sort of came across as a sort of this idea of hyper-personalization or hyper KYC, if you will, really understanding your client's needs and applying those needs in an appropriate way, which feeds back into financial wellness. It feeds into, as you say, having the right, the right decisioning process around how you invest the assets. And the big sort of thing, the big takeaway for us, and probably the number one aspect of the customer experience issue for the advisors was really around technology. Do I have the right technology in order to support the client? And that included things like portals and marketing tools, but as well, the CRM and the ability to invest in a way that's appropriate and manage the assets in a way that aligns with the client's goals. So, yeah, it was a really, it's an important piece of information for us as we're thinking about where do we invest our dollars, in that advisor experience, in the tools that allow the advisor to connect directly to the client. Pretty interesting stuff, and for sure, I think that is the big sort of shocker for us as well, is that traditionally advisors have been less focused on technology as the number one driver, and this year it was really the number one driver for them is improving the technology they have. So a big change.
Yeah, it was interesting because a lot of them felt that, some of them felt that there was too much technology because during the pandemic, there was an acceleration towards technology. And so it almost felt like they were just constantly being bombarded by new technologies. And the issue there became change management and actually implementing best practices to ensure that the message was conveyed correctly, one, and two, that the benefit to the end advisor was conveyed and that they understood why they were getting this technology and how it would help their business.
Sure. Yeah, and that's a tough one, right? I mean, each advisor runs their practice differently, and there's no one size fits all. And I think this is an important part of our learnings from the voice of the advisor, and and what we've done as well in terms of our strategy for platforms. We think about this concept of unified advisory. And unified advisory doesn't mean one way of doing it. In fact, quite the opposite. It means giving the tool set to the advisor so they can run their business their way. And whether they view themselves as an investment manager or a relationship manager or a coach or something else, providing the right tool set so they can operate their business effectively and efficiently and make money. While supporting their clients in the way that they think is the best. So,
definitely. Well, since you've brought up a unified managed accounts, UMA,
unified advisory, but sure. But unified managed accounts are definitely part of that.
Yes,
for sure. And there's a focus on this idea of a unified managed household, a unified managed advisory. To me, I think it was just as a unified account platform. Mm-hmm. And what that means to me is that our clients can take advantage of tools to provide capabilities that allow them to run their businesses more efficiently and their way. So, the value of a unified managed account is really an efficiency play. It's the platform does the heavy lifting of rebalancing and managing the trading activities that are needed for raising cash and so on and so forth. And leaves the advisor to spend time going and trying gathering assets or meeting your clients or spending time with their clients, right? So that's a very valuable tool set. The unified managed household takes that up a level and essentially says, at the household, generally speaking, we have a single IPS. In that case, why can't we implement that across a number of unified managed accounts, whether they be registered or non-registered, whether it be myself or my spouse, and put the assets in the most tax advantaged way into that platform so that they can provide the best service in a way that's super efficient. So that's something that we spend a lot of time building, and certainly it's available. How clients use it though is different, and each advisory practice uses it differently as well, which is okay. I mean, it's really about providing them flexibility and the ability to do things. I think that's what we heard from the Voice of the Advisor as well, which is we want flexibility. We want to be able to support our clients. We know the world is changing, and we're going to need the technology to support our businesses as the world adjusts.
Definitely. Yeah. I mean, unified managed householding has been sort of the pinnacle for certain advisory teams. It's something that they've been trying to achieve for a very long time. Mm-hmm. And based on your answer, it seems like unified managed accounts is the way to get there.
Well, it's the only way to get there. I mean, otherwise you're doing it as a reporting function, and you're having to cobble together some spreadsheets and try and figure out how to provide that capability. And it's labor intensive. So it can only be available for the most high net worth clients, because you really can't afford to do it for your average client. And that's the value of a unified managed household platform. It allows you to do that in an efficient way. And in order to do that, you need to have UMAs. You need to have a unified managed account underpinning to do it. So,
yeah, that sounds rational. I would say, but of course, everyone has their own opinions and prefers to do things in a certain manner. Now, as we were speaking, and another area that's important to advisors, but also I would say clients on the institutional sides, is smart operations. And so how do I do things efficiently? And more importantly, given the volatile times that we're in, how do we do it cost effectively?
Yeah, for sure. And I think this is, and it came out in the Voice of the Advisor survey as well, but it comes out in all of our conversations with all of our clients, which is, hey, we need to reduce our operating cost. And it's especially true for asset managers. Asset managers today are being squeezed on their fees. And so they need to find a way to reduce the operating cost of their business, and so we've responded to that and launched a business process outsourcing business to support our clients, and that's been we've had a big year for that, and it's grown dramatically over the last 12 months. And so we've had great success, and that great success is a indication of what the market sees, which is, hey, we need to find a way to operate more efficiently and more effectively and reduce costs. So smart operations, that's part of what we've done. I would say the other big aspect, and what I think everyone's investigating and most are starting to think about how to implement, is AI. So how do we use a generative AI model to improve the inflow of documentation into the operations center? How do we use it as a way to manage straight-through processing, so take it out of people's hands and make it more straight through, and reduce the number of people that are involved in operating the back office. So that is that's something I think all of our clients are investigating. We're certainly implementing for several clients and for ourselves as well, of course. And that ties in with, long focus and experience in data science, and then, of course, in workflow as well. So having the ability to deliver on those things is important. So, yeah, I think smart operations is it's a big part of how we're helping our clients succeed in this market. This is expanding, of course, into other areas for us now, fund accounting being one of them, where we're helping our clients really operate their middle office activities in a more efficient way using AI and data. So, yeah, a really exciting area for us, and big growth area for us from the last 12 months, and I expect it'll be even more so in the next 12 months. So.
Definitely. I mean, AI has I would say, been the winner of 2023. It felt like it came out of nowhere. It was with the launch of ChatGPT in 2022, December of 2022. And then it just hit the ground running. And now everywhere you go, all anyone wants to speak about is AI, which goes to show that I feel part of it is, for the first time, it was very democratized and anyone can go on and use it and see how easy and simple it was. And it created a lot of excitement where it's like, oh, like anything's possible. Like I just have to type things in and it'll give me whatever I want.
Yeah, sure.
So it's been a really interesting thing to see rise. Obviously, we do need to proceed with caution with that as well, as with everything.
The responsible use of AI is the important thing here. And yes, you can go on and use a publicly available, ChatGPT or other large language model. But the risk you have there, of course, is if you release your data into that model, then that data is available to everyone around the world. Same thing with your best business practices. So doing it in a way that's secure, that's ring fenced, is an important part of how to implement AI effectively, and it's certainly something that we're spending a lot of time on, which is how do we deliver that responsible use of AI. CGI is investing over $1 billion in this area over the next 3 years, and that was announced publicly, I think, about a month ago. So, big time investment, and of course, we have our own AI platforms, but we also are partners with all the major players in this space. And it's as I said, it's a huge growth area. I think it's going to be a big win for our clients as they look at ways to reduce their operating costs so that they can deliver more value to their clients.
Definitely. And you mentioned data earlier, but that is vital for AI to work properly. So you have to make sure you're feeding it the correct information. And what's been really interesting is that we've seen this shift towards what's called active data, where data is not just sitting there anymore and going stale. It's actively being used and updated to ensure that the most accurate and correct results are being presented. And so that would be true with anything. And of course, at CGI, we have a lot of data. And last year when you were here, we spoke about insurance and about our function in the Canadian auto industry when it comes to insurance. And just a few weeks ago, I saw a very interesting demo for an app called myAutoPlus.
Sure, yeah.
It looked like it was full of possibilities, so please tell us about it.
Sure, yeah. And we've been providing insurance information services to the industry for almost 40 years. So it's not new. It's not a new capability. And the big part of that is providing data for the purposes of underwriting and claims management, typically, and that's data on individuals, data on vehicles, and so that's an important. Those are important pieces of information, allowing an insurer to provide the right insurance policy, pricing, so on and so forth to their clients, and do it in a way that manages the risk appropriately. So it's been an important business for us. Part of our mandate in providing that data has always been to provide the same data to consumers. So if consumers want to know, what information is publicly available about them, they should have access to that information. It's certainly an important part of what we do. And so it's been in the past it's been a sort of call center and mail-based access point. So it takes days for someone to get access to their information. So what we've done recently is we've launched a product called myAutoPlus. It's an app that's available in the App Store and the Android or Google Store as well. And you download that app on your phone, and it gives you access to your insurance data in real time. So you always have the most up-to-date information. I think that's going to be a fantastic win for consumers. a fantastic win for insurers as well, as we can use that tool to update information and make sure the information is correct about the insured all the time. So, and part of what we're trying to do there is provide the insured with a score that gives them a sense of what things could they do or should they do to change the pricing for them that they pay for insurance. So it's a great tool for consumers to become the master of their pricing and their relationship with their insurer as well. So we think it's a great win for the market, and of course we have all kinds of opportunity to add on additional services using that app, and we're certainly investigating, looking at all of those different options now. So awesome new tool, and as you say, it's pretty slick how it works. So very proud of what the team has done to launch that and get that into the public domain.
Yeah, it's very simple to use, to navigate. Everything's right there, and the fact that consumers now will have readily available access to their data and sort of, as you mentioned, have information on how they can potentially change their rate. So what can they do to get a lower rate? I feel that transparency is fantastic and much needed, because so often with insurance, it feels like it just goes to this black box and then you don't see it. And this definitely changes that. So
yeah, it's fantastic. We're very excited about it, and as you say, I think it'll be an important step forward in how people manage their insurance. So
yeah,
and
definitely.
we're expecting a pretty big uptake on it as well. So very exciting for us, and I think for the industry as a whole.
I completely agree. And, we were speaking about wealth trends, but this sort of lends to the hyper-personalization piece, because now insurers can, because they'll have more data on their consumer, and the consumer will, of course, consent to sharing it, they can actually get better service. They can get service that they need and provide it to them sort of on a just-in-time basis.
Absolutely.
Without having to run through all the usual hoops.
Yeah, and they can add more services to the way in which they operate. One example is we're partnering with a security organization that has a specialized tool to secure your cars from sort of the fob attack, where they scan for your fob and then take your car, and that's a major issue in the industry. This tool will prevent that from happening, which is great. But you have to be able to prove that to an insurer to make it valuable. And so that's, how do you do that? And the app is a great way of us connecting the dots between that provider of the security device and the insurer. So
yeah, that sounds great. And I mean, those fob attacks are scary, because I heard that they can even penetrate through walls. So even if you have your keys in your house,
exactly,
they can still scan for it.
That's right. Yeah. And so what this device does is it essentially deactivates your key fob while it's not in use.
Oh.
So that it can't be scanned. And so that's a fantastic device, a fantastic innovation for the industry as a whole. And CGI has partnered with this firm to deliver that to the market.
Yeah, that's amazing news. Now, as we continue on speaking about client experience and hyper-personalization, another big part of this, and you've sort of alluded to it with how information used to be delivered versus how it's delivered now. And so when we look at the wealth management industry, the recurring theme has been that the industry no longer is dictating the pace at which information is released or how it's released. You have players outside. So, obviously the most popular ones are Amazon, Google, Netflix, where they anticipate your needs. And then they're like, hey, I think this is what you're going to like. I think this is what you're going to want. Hey, it looks like you're running out of this. Yeah. And so, we were speaking about the survey and about what advisors are thinking. And it's all along these lines of anticipating client needs. And it falls in really well with Gen AI.
Yeah, it definitely was. It was the number 2 theme that we pulled out of the surveys, which is this idea, as you said, of active data. And what does that mean? It's not just using data to reduce the operating costs in smart operations, although that's part of it. It's using data and analytics about the customer to provide value at the right point in time. And I think AI will be an important part of that. I don't think we've really seen how AI can be used in the wealth management industry to manage that yet. But we're definitely, as you say, we see it in Amazon, we see it in Netflix and others. We see it in our Spotify accounts or Apple Music as well, right? Our preferences are tracked, and we're given, we're presented with ideas and options. It does lead to some concern around bias. Mm-hmm. So there's certainly, again, the responsible use of AI has to be part of the way we think about using the tool set. So, but for sure, active data is the core of that. Having the ability to analyze customer behavior is at the core of how you make those decisions. So.
Definitely. Mm-hmm. And also, it greatly attributes to that client experience again, because now you're giving the client things that are meaningful to them at a certain particular point in their life. Yeah. Like I had Dan Richards on the last episode, and he spoke about out of pattern behaviors and using AI for that. So if you have a client that's, let's say, checking in their portal, before it was maybe once a month and now it's on a daily basis, there might be cause for concern there. And that's perhaps a trigger that's get pulled to the IA. Yeah, hey, you should go check in on them.
Maybe they're getting ready to move to a different advisor or some other issue that's happening in their lives. Yeah. No, for sure. I think that kind of behavioral information is highly valuable. Or, I think there's lots of examples of pieces of data that could be tracked and provide advisors some insight into what's happening with their clients. And as I said, I don't think the wealth management industry has done a good job yet of using that data in an appropriate way. And it's certainly becoming part of what is top of mind for advisors.
Yeah. Well, there was a recent survey released from Datos recently that essentially they did survey the wealth management landscape in Canada, mm-hmm. and they found that more than half are investing quite heavily within AI because they're seeing it as the future, because it's just not sustainable again for them to ignore this and say, we're going to sit out. Especially if we look at some of the bigger firms, they do see the use for it when it comes to being more effective, cutting costs, and obviously providing a better level of service for their clients. Another area of the wealth trends, and also an area that requires a fair bit of data, is financial wellness. And so one of the trends is, and you mentioned earlier the next generation that's inheriting wealth, but one of the other sides to that is females tend to outlive their male counterparts. So the biggest cohort of that's going to receive this next sort of transfer of wealth will be the women.
Yeah, it's interesting because, and I think the stats show that more wealth is with women now than with men, mm-hmm. just because of that exact reason, right? And I'm not sure that the advisory practices have gotten their heads around what that means yet, and some have, and I think they've been very effective, because I think the men had been focused on returns, whereas the women are more focused on goals and specific actions. Am I okay?
Right.
So a different way of managing your practice is important, and that came through in the survey as well. So we heard that from the advisors, that they saw that as an important thing. We see that as a big theme as it relates to financial wellness. And financial wellness for us is something that we've been investing in heavily. We launched our product last year, or this year past, and we'll be launching our next generation of that in March of 2024. So very excited about that. And the focus there is really on democratizing the ability to have a financial plan, and also thinking about the financial plan from a role-based perspective. So that for us has been the focus, and right now I think the financial plans are there for the wealthy. They're not there for the mass affluent market, and they tend to be a bit stale. In terms of the process. So you get your financial plan done. It's like a book on your desk and collects dust, and no one looks at it ever again. So making that more active, making the data aspects of that in part of the day-to-day operation for an advisory practice, that's really what we see as the big change in financial wellness. And as you say, talking about the transfer of wealth as a great example of that, tracking that behavior and making sure you're providing value to those clients, means that you're going to have a more focused sort of wellness coach, financial coach kind of attitude as you continue to drive your practice forward. And that's what we're hearing from the advisors as their focus. They're going to differentiate using tools like financial plans and financial wellness. They do it today, but they think they can do it more effectively. And so we're trying to respond to that with the right technology.
Definitely. And to your point, this is, I would say, one of the biggest areas because, and you mentioned this, but no one really cares for that 50-page financial plan anymore. Like, I'm sure there's some people out there who still do, but the fact that it takes so long to build one out, and then it's not active. Like, it gets printed and then it sits somewhere and it collects dust.
I think no one is a strong word. I mean, I think there are good reasons to have that kind of a financial plan available, for some clients. But I think it's a small group. It's not the vast majority of clients. For the vast majority of clients, it's a more active tool set is more appropriate. Maybe it's not quite as comprehensive as the traditional financial plan, but it has a connection directly to the investment tooling, right? So your asset servicing is directly tied into the financial wellness and the plan. That's where real value happens, I think, in that space. So being able to look at where you are relative to your plan on a monthly basis with real data, and across a bunch of different areas, not just your investment wealth, but also your debt, your real estate, your other assets. And having that view is, I think, something that's really important. And with open finance, with the right tools, and a more simplified way of managing the financial wellness, so that it can be run by your advisor, as opposed to having to bring in a specialist. That is, to me, that's kind of the magic that we're trying to see happen in the market, and I think that's what people want. So,
definitely. And again, I feel that, and you brought this up, but the idea of scalability, where it's, yes, traditionally, it took a lot of man hours and manpower in order to generate these financial plans. And I feel also now people have different lifestyles where it's not really the prescription of you retire at 65 and then you do your drawdowns and, maybe you go on vacations and you retire and, you're happy. Now people tend to work for longer. Perhaps it might be part-time. Maybe they're contracting. And so for all these changes, you do need a more dynamic plan, where you can change things more easily. You can move pieces around. You can look at different scenarios.
Plans change. I think that's right. I mean, I think that for all of us, what we thought was our plan when we were 30 is not what our plan really is when we're 55 or 60. And, I can tell you that from experience. And your desire to go sit on a beach might change, right? So maybe you want to do it sometimes, but not all the time. So yeah, absolutely. I think that a dynamic plan is an important part of the way you operate your business, and for an advisory practice and for clients. It's ultimately that's why it's so important. Is the clients are expecting that something more dynamic. And you mentioned, collecting your paycheck. We've been focusing on this idea of decumulating assets. I don't think very many firms have done an effective job of providing the right tools for that. And that's something that we're really focused on, which is, how do you take your many sources of income and, in a tax-advantaged way, make decisions about including part-time work or other work that you might be doing, and make the right tax advantage decision about how to decumulate those assets and take money out. So that's a big part of what we're delivering as part of our financial wellness platform, and I think it's a gap in the industry as well. So excited about that.
Definitely. I mean, all the focus, it seems, has been on the accumulation phase, not so much on the decumulation. And as more people retire and we have the baby boomers, which is a large cohort of individuals, they're definitely going to need those services.
For sure.
So decumulation is a big part. The other big part of all this is tracking, and the fact that now there's so many different tools out there as well, but you need to be able to go in and say, hey, I want to know where I am today. Like, how do I look? And before, it was very difficult to do that. You would have to maybe call your advisor and have them run a report for you. But now with more lighter tools that are available to the masses, they can very easily go create a little mini plan. It might be for, I don't know, I want to buy a new car. How am I on track to get this? How does my portfolio look?
Yeah, I think there's been lots of talk about doing this and delivering it, but I'm not sure a lot of firms have done it, effectively, right? So I think there's still a gap in the market there, and certainly, that's part of what we're trying to solve for. And so there's a couple of aspects of that. One is the portal and access for the client to get into that data. The other side of that is, and I think that's one of the things, by the way, we heard from the advisors as an important part of the customer experience, is providing that right portal. The other side of that is having that financial plan. Like, what are my goals? What's the timeline for those goals? And then how am I doing against those goals is the question you're asking. I don't think there's a lot of places where you can go and look at that and say, am I on track? Not right now. So that's something that I think the industry is embracing now and seeing as important and wants to deliver. But it's still fairly traditional performance reporting that clients are receiving. And very few of the clients, I think, are getting goal-based reports at this point. So, and don't have access to a portal with that. So it's a gap that needs to be filled for sure, because it's certainly something consumers want. And it's in what we heard from the voice of the advisors want to provide it as well. And, they're looking for the firms that they work with, whether that be in the US and RA works with a TAMP, or whether that be, an advisor who's attached to a major firm like a bank. They're looking for the firm to provide those tools and give them access to that information for their clients.
Definitely. And again, it seems to be that the shift is going towards giving more control to clients over their assets, and also, I suppose, just having a lot more transparency, because for the longest time, portals were sort of a big invention, and it was a big change because now clients could suddenly go in themselves and see what their accounts look like without having to speak to an advisor and having them send something over. And people have become more accustomed to having transparency into their assets. And I don't believe that's a bad thing. I mean, our new insurance app, myAutoPlus, will give them transparency to insurance. There's all these portals that will give them transparency into their assets. And this just allows them to be more engaged, in my opinion, because they definitely feel like they're a part of the process now versus just like maybe having a semi-annual or annual meeting with their advisor.
Yeah. I think that transparency is very important. And I think it is about transparency as opposed to control, because I think, for the vast majority of people, they don't feel that they have the expertise to manage their wealth in an effective way, and that's why they need an advisor. That's why they need someone to help them coach their way through it. But definitely, they want to have a view of it, and they want transparency into what's happening. And so, and that's not to say that they're going to check the returns on each asset every day or anything like that. It's just more, give me a view of my my situation relative to my goals. Again, I think that's what's missing is, we haven't aligned the goals and the financial plan to the actual implementation of that plan. And we don't track it that way right now. That's not what the industry is doing. And I think that's where we want to take it. And I think that's where it should be going as well. So we're excited about that. I think this is a big win for advisors and clients, and for the firm as well, because really it's about delivering super value to your end client, right? So
definitely, and so with CGI, we're of course helping firms with technology, and providing IPs. But we also have a consulting side. So you mentioned a lot of gaps that the industry has. And we have a management consulting team who goes in and who does these analyses to figure out where your gaps lie and how they can help you become more efficient. Can you speak a bit about the management consulting team and some of their activities for the year?
Yeah, I think in the wealth management and insurance domains, we've invested heavily in having the expertise we require. And I think it started out as expertise so that we can make the right decisions about what we were building, and morphed over time into, hey, we can help our clients think differently about how they're going to operate, update and review their target operating model, think about, how they're going to deliver that financial plan to a client differently. And do that in the context of their situation. And we launched that consulting business a few years ago. So it's gotten quite large now. It's a very successful business. And I think, there's a great team there that's prepared to help our clients think differently about how they operate their businesses. Think about launching additional, businesses and practices. And then how do you operate your business effectively and efficiently as well? So a great team there, and we're ready to help. So don't hesitate to call us.
Of course.
Yeah.
We spoke about our VOA survey, but we also have a VOC survey, which is Voice of the Client. Can you speak about that?
Sure. I mean, Voice of the Client is an important part of CGI's overall view into what's happening with our clients around the world, and drives the sort of main themes of what we see in our industry. And this goes to typically C-level executives, whether they be on the IT side, CIOs, or on the business side, so group heads, CEOs of businesses. And they're conducted in person, so we actually do in-person interviews, collect a great deal of data, and then share that data back to all of our clients. This year we did over 2,000 interviews, so a pretty significant number of interviews around the world, and many of those were in wealth and asset management and financial services. I think about 20% of it. So a big number, it's hundreds of clients. And, the data that comes out of that is, it really gives us a good view of where the spend is going to be in our industry, which is great for us. But also it allows all of our clients to validate their views of what's going on as well. So we're taking in the data, but then we're sharing it back, and they get a view of what other clients in their industry are doing and focused on. And we provide that back with a set of themes that are the sort of key themes that are driving what's happening. And they're not unlike the themes that we see in the Voice of the Advisor. There's a few differences. Big focus on cybersecurity. So cybersecurity, number one risk and concern for executives around the world. But customer experience is a close follower to that. Use of data and digital assets to provide value to their clients is a close number three in that list as well. So some very interesting parallels from what the advisor is seeing and what our executive clients or the CIOs and the CEOs of the firms are seeing as well.
Yeah, it sounds great. And cybersecurity, that's definitely a big one. I was at a conference earlier in the year, and I believe they said that it like tripled in value. So it was it went from I think it was in the hundreds of millions, and during the pandemic, it tripled and went into the billions of dollars. And it was the fastest growing industry, essentially, which was crazy, is that it's cybersecurity. But sure enough, you have all these phishing attempts and different fraudulent activities, and it's terrible, but there definitely needs to be a way to tackle it.
Ransom attacks and so on and so forth. Yeah. I think this is a really top concern for our clients, and we need to be vigilant about how we deliver our services. A lot of our services are software as a service. We have client data. We have to make sure that we're protecting that data effectively. And so for us, security is number one. It's probably the number one thing we think about when we're delivering our services to our clients. And of course, we have to back that up with the right audit results and so on and so forth. I think for all of our clients, cybersecurity has become a core part of their job, So, and you wouldn't have thought that of a CEO 5 years ago, but they have to think about it on a daily basis and make sure that they're investing appropriately in order to protect their businesses. And yeah, it's a big risk. It's certainly something that we all have to track. So it can be managed though, and I think we and many of our clients are effectively managing it. But it changes every day, so we have to change with it and evolve with it on a daily basis. And I think that's why the industry is growing so fast, because every time you figure out a way to stop an attack, the attackers come up with a new approach, right? So
yeah, they're definitely very innovative. I will say that about that industry. You also mentioned digital assets.
Yeah.
So I suppose let's start with, what are your thoughts on digital assets and where you see this headed?
So you're thinking NFTs kind of?
We can do NFTs. It could be coins. It can also, because when I think about digital assets, I even think about IDs now. So because digital ID is becoming a very big thing, and when we think about what we just spoke about.
I wasn't thinking of it in that context, but I mean, certainly I talked to it. I mean, it's this. The world of payments and financials is democratizing for sure, and so we're going to see that happen over time. I'm not sure how fast it's going to happen, and certainly governments are getting involved to make sure it happens in a way that's effective. And of course, we saw a lot of fraud, a lot of issues with some of the exchanges. That happens, I think, at the beginning phases of a change. But I see this as something that's going to take hold and be part of how we operate our businesses. I think for advisors, they saw providing access to digital assets, to coins, and to other NFTs is an important part of how they operate their business. And certainly for many of our clients, for their clients, I should say, they will hold digital assets, and they'll want to have mark to market on that digital asset and have a view of the value of it in their holdings. So, yeah, it's definitely a changing part of our business. I wouldn't say it's the biggest part of our business right now. But definitely, you see the impact. If you look at it 10 years, 15 years, 20 years, it's going to have a big impact on the way we operate.
Definitely, especially considering that you have central banks now that are getting in the digital asset space.
Sure.
Right? So,
I mean, who carries cash anymore?
Yeah.
Not very many people, right? So why is the fiat currency so important, right, in that context then? And why not a global currency? So it's an interesting challenge. And, the payment industry has always had a challenge with moving money between countries. These coins, the NFTs have the ability to cross borders in a way that other assets cannot. So,
yeah. Well, the idea of a global currency is interesting. But it's very true, the fact that these cryptocurrencies have come in and they have transcended borders. And a lot of the friction that existed previously is no longer there because of them. And there's also been lowering of a lot of different transactional fees. When I think about there were some big coins that people were using for a while to get past some of the union fees whenever you transfer money from one nation to another. And so in order to do away with those percentage points, they're we're just going to use crypto.
And as it becomes easy to do, why wouldn't you? Why wouldn't you bypass those fees?
Yeah.
Right? Why pay them if you don't have to? So I think that's that's part of what most people do is they think about how do I operate more effectively and efficiently. So, and if it's a more efficient way to move money, then eventually it's going to become probably a core part of how we operate.
Definitely. So
I don't have a crystal ball on this one though, so I can't say I know exactly how it's going to play out. I just know it's going to be different for sure. And there is a sort of Web 3.0 and virtual world kind of thing happening out there, and how that's going to play out, I don't think any of us really know. But we know there's going to be change for sure.
Well, Web3 is really fascinating, especially when you bring up things like virtual worlds. So you have the metaverse, and there's been a lot of I've heard chatter and interest, I suppose, in even setting up virtual bank branches, for instance.
Sure.
So we think about what happened during the pandemic, for instance.
I've heard of people I know buying virtual Gucci shoes. It's and paying almost full price for them. I was like, that's what you'd pay for them if you bought them at the store.
Yeah.
And that's for your avatar, right? So, it's and paying for that with coin, of course, is that's Bitcoin or whatever. It's the only way to pay for it. So, it's a whole new world. I'm not sure how it's going to play out. I personally think it's kind of crazy, but hey,
Well, I thought the wildest one, this was the first one I heard, was Decentraland, where people were buying land and they were paying six figures to get land because they're this is going to be the prime area.
Yeah.
And so that was very fascinating, but it goes to show that there is definitely a market out there for these types of things.
Yeah. Yeah. And also, I think we've seen this sort of bubble burst on some of the NFT market at the same time, right? So people are a bit more cautious, I think, now than they were maybe a year ago. Which I think is reflective of the whole market, actually. everyone's a bit more cautious now than they were a year ago, right? So, interesting. Yeah, for sure.
Well, that's true. People are a lot more cautious. And I know it's funny, but like I feel the meme stocks definitely taught everyone a lesson. That whatever goes up must come down at some point, and it can come down very quickly.
Sure. A lot of people made a lot of money off that too, though. So,
they sure did.
Yeah.
Now, before we wrap up, I would love to hear, I know earlier you said you don't have a crystal ball, but I feel you're quite accurate a lot of the time. So what are you expecting for 2024?
Well, I won't talk about the economy because I'm not sure where it's going to go. I mean, I read the papers like everyone else. It feels like the world thinks that there's going to be a soft landing for North America, which is good. Seems like the U.S. is a bit ahead of Canada in terms of how that market's going to turn, and so I would say most people, I think, are expecting to see some interest rate decreases next year and some relief on mortgage rates, which would be good for the financial services industry and good for consumers, of course, as well, in a big way. How that's going to play out in the markets, I'm not sure. So I wish I did. I'd buy the right thing then and make money. I don't think I always do. But it's I think it's good news for the economy. I think it's good news for consumers. For our business, I see a real focus with our clients on smart operations right now. So, we're definitely going and doubling down on that focus, which is how do we provide a way for our clients to operate more effectively and reduce the cost of operating their business, but also become more efficient and deliver more value for their clients. Having that ability to operate in a digital world effectively is important, and it's still a missing link, I think, for some of our clients. There's a lot of hands and toes involved in the process, and reducing the number of hands and toes reduces the cost, but it also means that the data is more accurate, more efficient, and that in the end is good for advisors and good for clients.
Absolutely, and I feel the reducing hands, part of that is obviously always that you're going to retrain people to do different tasks. So they won't just always be doing the same thing that they've done previously.
Yeah, I don't see a big, we see it in the unemployment rates as well. I don't think there's a big employment issue looming for people with smart operations. Not at all. Quite the opposite. I think there's a lot of focus on how do I use this as a way to grow my business and do more. And so I think that's a real positive aspect of what's happening in the market. And freeing up that capital to invest is what we need. We need to see innovation in the market. We need investment. We need capital investment from our clients. And the industry as a whole needs to see capital investment happening in order to drive growth. So that's how our clients our end clients are going to end up getting value. So.
Absolutely. And I believe it was The Logic. They released a stat a few weeks ago that said that 50% of employees will need to be retrained over the next couple of years as these new technologies are introduced. So it's, as with everything, it's just a learning curve, and it's just a cycle that people need to get accustomed to because things change and you have to keep up with it.
For sure. Yeah, I think that's absolutely true. I think, as I said, the world's changing. How it's going to play out, I don't think any of us know for sure. But you're absolutely right. I think we can be certain that there will be a requirement for us to update our operating models, update the way our employees work. And that means, new training regimes, new training programs, new ways of operating. And this is where I think firms like us come in, not only in providing tools that allow our clients to implement those changes, but also the business consulting to help them think about what's next for us and how do we best deliver a value to our clients and grow our businesses.
Right. Was there anything that I missed that you wanted to discuss today?
No, I didn't have a closing topic or anything in mind. We didn't talk much about institutional investing, and I think that's an important aspect of what we're doing these days. So maybe I'll spend just a minute talking about what we're doing in that space, and specifically around things like fund accounting and middle office activities. To me, I think that's an important thing for our clients. They're looking for ways to drive efficiency and to better address some of the cobbled together platforms that they have, so rationalized systems, and it's an area of big investment for us as well. And this is pension funds, this is asset managers, and this is dealers as well. So we're seeing it across all of our client areas. That this is an important part of change. So it's an exciting area. I wouldn't mind. Didn't mind taking a minute to think about. I'd say other than that, wishing everyone a happy holidays is another thing I'd like to share.
Yeah, of course. Well, 2024 looks like it'll be a very bright and fun year. Mm-hmm. Thank you for coming in. This was a very insightful conversation.
Yeah, and thank you very much. I wish everyone a happy and healthy 2024.
Of course. I hope you enjoyed this episode. If you did, please be sure to share, like, and subscribe, and we'll catch you with the next one.